Hello, in this lecture we will define cost accounting system. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of cost accounting system is accounting system for manufacturing activities based on the perpetual inventory system. When considering a cost accounting system, we are typically thinking of manufacturing companies that manufacture inventory, generally starting from some type of raw material which is processed in a work in process account, then moves to the finished goods account, finished goods being similar to the inventory account, which would be in a merchandising company which just buys and sells, meaning that once it's sold, it's going to move from finished goods to cost of goods sold, the expense. The two types of cost accounting systems to track inventory through that process, through that manufacturing process, typically are a job cost system and a process cost system. A job cost system would look something like this, where we have the trial balance here, and we're breaking out the inventory accounts on the trial balance in terms of their components being raw materials, work in process, finished goods, and overhead. These being the components of inventory that will end in finished goods, which will then be sold and move to the cost of goods sold. In a job cost system, we are going to back up these accounts as we do in every type of account in the general ledger by order of transactions. So we have the raw materials general ledger, the 170 here matches the trial balance 170 here, finished goods general ledger account backing up by order of transaction here to the trial balance here, work in process backed up in order of transaction from the general ledger to the trial balance, as well as the factory overhead backed up from the general ledger to the trial balance. A job cost system also wants to track the jobs that are related, because once we sell the finished goods, we need to know not just what the cost is in total, but the cost per job, so that we have a format of selling that particular job. And therefore, we're going to break the same information out by job. So we have job 14, 15, and 16 here. We've got the materials, labor, and overhead related to the jobs. Only open job being job 16. So this 260,000 open job is what should be reflected in the work in process account as well as the general ledger account. In a process cost system, we're using a similar concept in that we're going to have similar accounts that will track the process through the manufacturing process, where we have the raw materials, but then we might have different processes. And this is usually a system where we're making all the same type of items. So if we're making something like taffy, or we're producing oil and refining oil, then we may have the process 1 and process 2, such as making the taffy and then packaging the taffy possibly. And therefore, we're going to track that information not by particular job, because the jobs are not distinct, but by process. So we're going to have the same type of system in that we have the raw materials moving to work in process, moving to finished goods, ultimately moving to cost of goods sold, the expense related to the sale of the inventory. However, it's moving through this process, not being tracked by job, but by process. Therefore, we could have two work in process or more work in process accounts tracking the costs as they flow through the process.